Hello everyone, welcome back. This is Jeff from Mysteel's iron ore department here to give you the latest on China's ferrous market. Let's dive in. The domestic ferrous market remained generally fluctuating, although steel fundamentals showed signs of deterioration as the off-peak season continued to weigh on the downstream sector. Market sentiment weakened slightly in the absence of any major macroeconomic or industrial policies, despite newly released customs data showing strong steel export performance for July. However, the futures market still witnessed high volatility, with coking coal outperforming amid rumors of a government directive aimed at stepping up inspections on overproduction at domestic coal mines. This, combined with the recent impact of heavy rainfall on coal production and transportation, fueled speculative sentiment. Steel fundamentals deteriorated further as total inventories continued to rise. Healthy steelmaking margins encouraged producers to maintain high output, resulting in increased finished steel supply. Meanwhile, downstream demand remained subdued due to seasonal factors, and overall steel transaction activity weakened as speculative buying faded following the prior week's price correction. However, market rumors regarding potential production restrictions linked either to the upcoming military parade or annual output targets have reemerged. While none of these have been officially confirmed, they have provided some support to steel market sentiment during this period. Production from both mini mills and integrated mills edged down, despite favorable margins. Hot metal production continued to fall unexpectedly, primarily due to scheduled blast furnace maintenance. However, overall production levels remained high, limiting the impact on raw material demand. Iron ore prices remained range-bound last week, with port-side inventories posting a slight on-week increase. In addition, the fifth round of coke price hikes in the spot market has been successfully implemented, and a sixth round has been proposed in some regions. Total coke inventories continue to decline, with inventories at independent coking plants hitting a historical low compared to the same period in past years. Looking ahead, steel fundamentals are expected to weaken further, though growing expectations of production restrictions are likely to offset some of the downward pressure. Raw material prices may remain volatile, but significant downside is unlikely unless large-scale production cuts are officially confirmed. Additionally, ongoing uncertainty surrounding China-U.S. negotiations may contribute to further market fluctuations. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.